The siege is over. Elections 2019 over. We already know who our president is going to be in this great country, Nigeria, for the next 4 years. And in very many states across the country also, we already know who our governors will be for the next 4 years. In most cases, we already know who our National House of Assembly representatives will be for another 4 years, effective 29th of May 2019. And of course, in very many states, if not most states, we already know also who the State House of Assembly members will be for another 4 years, effective 29th of May 2019. And so, with that, I welcome you to another exciting moment on Lagos television. Good afternoon to you. And so, with the siege being over as we speak, how is the Nigeria's equity market responding to the fact that Nigeria, as at today, is not boiling? We are not fighting against ourselves. Of course, because when you talk about politics, it is a game, but a game of power where one force is attempting to dislodge another. So there might be bitter occasions. And so when such happens, well, elections are over and we've got to just forget and forgive and then move on as brothers and sisters. Of course, there are pockets of negative reports in maybe 1 or 2 states as at this morning, maybe Rivers, maybe Oyo State, but Lagos, which is the center of economy in this country, is relatively peaceful. All right, I drove from my house to the studios this morning without any form of molestation. So what does that suggest? All those that prophesied against the destiny of Nigeria as far as the elections 2019 are concerned, they actually got it wrong. Those that believe that Nigeria is not going to exist as an entity anymore after the elections of 2019, you and I now know that those prophecies failed. And that suggests that those prophecies did not actually come from God. So how is the Nigeria's equity market reacting this morning? If you ask me, ideally, in a normal setting, the market should be looking up. But as I speak on the floor of the Nigerian Stock Exchange, from data that I can access right away as I'm seated here in the studio, the major indicators are currently looking down. I don't think that would be a direct response to the fact that the elections went well and that Nigeria is not burning. But like I've always said, you see, before you jump into conclusion as to what the market is responding to, you've got to take a look back a little and then look at some other indicators. All right. Now, for last week, the indicators actually were looking extremely weak. As a matter of fact, I had expected that the market would be down more days than gain last week. But incidentally, for 5 days, the market, or out of 5 days, the market was up for 3 days. Monday, Tuesday, Wednesday of last week, the market was up. And then on Thursday and Friday to end trading session on the floor of the Nigerian Stock Exchange last week, the lead indicators actually were down. I think what the market did was just to still continue right, in that dimension up until this morning. But again, the siege is over, like I said, for one solid year. Market responded to fear in the minds of people. Market reacted to negative prophecy. Market reacted to negative expectations for the elections. Not necessarily that equities or companies that were listed on the floor of the Nigerian Stock Exchange performed badly. No, as a matter of fact, many of them improved tremendously over and above their previous year's performances. But then the responses of generality of investors and market operators were not in proportion to performances from those quoted companies. In other words, we saw situations whereby results came in, earnings came in, and these earnings were positive. As a matter of fact, talking about audited reports as at 2018 for the 2017 accounts for most of those companies that are listed on the floor of the Nigerian Stock Exchange, they also gave dividend. And even before then, a number of them that were used to giving interim dividend also did not fail investors' expectation, but market reacted negatively. And at the end of the year, the all-share index of the Nigerian Stock Exchange ended in the red, entering 2019. As a matter of fact, significantly, the all-share index of the Nigerian Stock Exchange of the 12 months in 2018 had positive performances, majorly 2 months, and 1 other month, relatively flat performance. For the remaining 9, the all-share index of the Nigerian Stock Exchange was down. But again, we have seen a market this year that had attempted a strong comeback. All right, we saw in the month of January, the all-share index of the Nigerian Stock Exchange was down 2.8%. But in the month of February, the all-share index of the Nigerian Stock Exchange bounced back, wiped off all the losses it recorded in January, and then added another more points. In other words, the market grew 3.8% in the month of February. And month to date, as we speak, the market is still looking up. Now, when you see the indicators in red, when they ought to be in green, when you see prices of equities declining, when they ought to be growing, it becomes a very great opportunity for you to buy. It is actually a buy opportunity. So let the indicators continue to show red. That is now a buy signal for savvy investors, those who could take the bull by the horn. Why? Go and look at most third quarter results. They came in positively, and so far so good this year. In this earnings season, we are already inside of 2019 earnings season. All right, and that is the season when earnings are released to the market, when dividends are declared. So investors in the Nigerian market at this period of the year are always very bullish, because money comes in from right, left, center. As a matter of fact, money also comes from the back. So from every quarter, from everywhere, money comes in for them. And this money could be in form of 2 kobo dividend, 5 kobo dividend. It could be 2 naira dividend, 1 naira 50 kobo dividend. But when you put all this together at the end of the day, relative to the quantity of shares each and everyone owns, it becomes bulky. That is the wisdom investing in the stock market. But that is not where I'm going. Now, for most of these results we have seen, so far so good this year. And I can tell you 3 companies from the financial subsector of the market had released their results as we speak. This include Zenith. Zenith, of course, recorded 15% decline in its audited report. All right, but again, they managed well, and then the profit after tax grew, and they did not also record any decline in the dividend payout to investors at the end of the day. Those who invested by believing in Zenith as at this morning are sure of 2 naira 50 kobo dividend. And then the second company, maybe banks, yes, the second financial institution that released its audited report was Guaranteed Trust Bank PLC. And Guaranteed Trust Bank PLC recorded marginal about 3.9% growth in the turnover. We are still going to look at that result from Guaranteed Trust Bank PLC, because on this platform today, people keep asking, why is it that the price of Guarantee is higher than the price of Zenith, despite the fact that Guarantee is giving 2 naira 45 kobo dividend and Zenith is giving 2 naira 50 kobo dividend, and then the earning per share of Guarantee is lower than the earning per share of that of Zenith. We are going to do peer-to-peer analysis. So and that's why I want to beg you, call your friends, call your colleagues. They must watch this program, and if possible, they must also listen, because as you are watching, you are also listening. All right, I'm going to be doing that with Aruna. Is already in the studio. All right, but Guarantee still gave dividend higher than what it did in the previous year. Their turnover grew, the profit after tax grew, and then other indices also grew. And then the third bank that released its result is IBTC, Stanbic IBTC, and that also reported tremendous increase in turnover, profit after tax. And as a matter of fact, because this company, we want to describe them as Shylock, all right, from 7 naira 4 kobo earning per share. We're still going to also talk about this when Aruna comes on with me not too long from now. They will still give 1 naira 50 kobo final dividend. You want to say that is small, but I will now take you back to the previous year to ask you, what was it that they actually declared? 50 kobo. So from 50 kobo to 1 naira 50 kobo, what percentage growth is that? It is not lower than 200%. If that is the case, as we speak now, results from quoted companies that we are seeing are improving. These results are encouraging, and this should lead to improvement in their prices. But in a situation where earnings are growing and prices are not proportionately responding, please know that it is going to be for a short while, because in the long run, price and earnings must move proportionately together, and that is the second law of equity behavioral pattern by in Abionomics. Right? Abayomi or Babolujo. Anyway, Abionomics. These are the things that I postulated, and they stand firm, all right, because they have been proven over the year. So as we speak, most indicators on the floor of the Nigerian Stock Exchange are currently looking down. Why are they looking down? They are looking down because those equities that are gaining are not those that have weight that could impact on the performance of the broad indexes. All right. For example, as we speak now, highest percentage gainer is National Salt. That might still change before the close of trading today, but as we speak, National Salt is up 8.5%. Sovereign Trust Insurance is currently up 8% as we speak. Then Union Diagnostics, right? We will still talk a little bit on Union Diagnostics. So Union Diagnostics and Clinical Services is up 3.5%. But what is the going price? It is just 30 kobo. United Capital, that is UCAP, that company was coming down because the market was not so impressed with the audited report and the dividend payout, but then it is currently up. Nemeth is currently up 1.56%. Zenith is currently up 1.34%. FBN Holding is currently up 1.23%. Access and Honeywell. But if you see the percentage growth in Zenith, percentage growth in FBN Holding, these are first-class equities actually, but what growth they are currently experiencing are not such that could impact on the broad index. All right, now come to those equities that are currently down: Niger Insurance, Cornerstone, Abbey Building, Japan, Mutual Benefit, Jaiz, Ecobank, Nestle. So the fact that Nestle is losing alone, though it's just 1.94%, all right, suggests that the market might also be looking down. If you look at, maybe I could quickly look at what an equity like Dangote Cement is doing, just in an attempt to look at the reason as to why the market is currently looking down. Dangote Cement is flat. If only Dangote Cement has gained just 1% or 2%, those losses we currently see, or those red we currently see, we definitely be looking green. Let me also see a stock like Nigerian Breweries. These are those equities that really can impact on the broad index, so that somebody will not just be confused to say that the election are now completed and then the market is not responding well. Nigerian Breweries is also still flat. Those equities that are currently up on the floor of the Nigerian Stock Exchange are not such that could impact the major index, and not that the market is angry that the elections ended very well. All right, so the right issue of fixing healthcare PLC opened last Wednesday. Have you got your right? I'm going to go on a short break now, very short break. When I return, I'll be creating some time to talk about this right issue from fixing healthcare PLC. After that, then Aruna and myself will take the time and then we navigate through what is happening in the market, do the peer-to-peer analysis between Zenith and Guarantee, and look at also those equities that you should be considering for your portfolio on the floor of the Nigerian Stock Exchange. So I go on a short break. I will soon be returning. So please don't change this television channel.